do not underestimate the ETFs. They're more punk rock than you think. Think about it. The ETFs came out 1 year ago. They have more Bitcoin between them than Satoshi. So they have 1.2 million Bitcoin in a year. Why? Because they're so easy.
Thank you, sir, for doing this.
You're welcome.
I appreciate it. To start with, can you please tell me your name and what you do?
Eric Balchunas, Senior ETF Analyst with Bloomberg. And I am leading a team of about 10 people who do funds and ETF research around the world.
Great. So can you tell me, when did you first become aware of crypto? I imagine it was Bitcoin. And then when did you have to start paying attention to crypto in a professional way?
Well, to be honest, those two questions are almost the same answer, which is in 2013 when the Winklevoss filed.
Wow.
Yeah, that's how early the Winklevoss twins were with that filing. They filed for a Bitcoin ETF in July 2013. The price was like $90. My Lord, I kicked myself because I knew about it then, but I don't know. It seemed like a fad, and anyway, and then there would be different cycles of filings, and the SEC would say, no. So I would deal with it every 3 or 4 years. And I didn't really throw myself into it until they were actually approved. And the last year leading up to the approval, I really dove in and learned more. I think in the other times, I will say I did respect its ability to come back from major drawdowns. I thought it was going to die 2 or 3 times, and it didn't. And I respect that. And then it seemed to piss off the right people. There's some certain people who were like, and I was like, you must be doing something right if this person's upset. So those are the two things where I was like, okay, but I didn't know much more than that. And then when Gensler was considering these, and James and I on my team saw an opportunity to become the ETF people to the crypto world, we jumped on this and I learned a ton. And now I think I get it. I mean, I'm still probably a 3 out of 10 and knowledgeable compared to some people here, but I was a 1 for a while.
That is amazing. Yeah. So early. I love that.
I know.
No, but yeah,
I know.
great.
And honestly, the Winklevoss twins, in a way, they should have been rewarded. It's almost like another Facebook in a way where they could have had the $50 billion fund. They're doing fine. Don't worry. But they really were first. They were ahead of the curve there.
That's so awesome. It reminds me of some TradFi people I followed who bought relatively early like that. And then they sold when they made a 500% increase, right? They bought it 90.
Yeah.
And they sold at 300 and they're like, I'm amazing. And they tell these stories now oh my God, what did I do? Right.
Yeah. You hear that with Apple stock too. There's some Apple stock stories that are similar, maybe on a smaller scale though.
Yeah. All right. So I've spoken with a lot of Bitcoin platforms. They do lending, yield, crypto custodians wrap Bitcoin kind of stuff. And they all see the spot ETFs as competitors, right? I think they point at the ETFs and those are wrapped Bitcoins. That's all that is. I'm wondering if on the other side, on the institutional side, do they view these Bitcoin people as competitors at all? Or do they just think, oh, these are just kind of small potatoes?
Yeah, it's smart for the exchanges to be a little worried. Because as I said in my presentation earlier, the exchanges charge you for trading. And, let's say they charge even as low as 40 basis points. The ETF is 1 basis point. So you can't compete with that, really. You won't make any money. That said, the ETFs do have an expense ratio, which is an annual fee of about 20 basis points. So ETFs are very cheap to trade and own. That's why they're so popular. And they disrupt a lot of things. They take money from the derivatives world. They take money from stock picker world. They take money from mutual funds. Do not underestimate them. That said, the ETF issuers probably do think about the exchanges a little, but I think more so they're worried about each other. There were 10 Bitcoin ETFs launched on the same day. So I imagine that Fidelity and BlackRock and Invesco were more worried about beating the other guy than they were about Coinbase or any of these smaller exchanges. So that's how I would say they probably look at it. This is me just speculating. But I do think the exchange and the Bitcoin are doing the same thing in a way, because you don't really have your own wallet there anyway. You're outsourcing them getting the crypto for you.
Yeah, custody.
It's the same thing.
Yeah.
The ETFs just do it in a way that's really cheap, intraday liquidity, but maybe even more better, totally regulated. Like that ETF, you took 11 years, but there's a 100-page prospectus, lawyers, and the boomers and older people and professionals, they like that. They don't want to, because no one wants to, like, they're not as big on risk as a younger person who's retail.
Right.
Yeah.
These exchanges and these custodians, these Bitcoin like native custodians, they say to me, people like me, like, we're gonna beat them eventually because we're gonna do things like provide what's it called, like native yields, right? And I know that ETFs can do that, but it takes a lot longer for them to offer those kinds of things. So, or can they even do that? Could they
It's complicated.
offer a dividend?
Generally speaking, like IBIT could never give you a yield.
Oh, wow.
Because
why?
it's a 33 Act fund, and those are called trusts, and they can't lend securities out. So there's no way to get yield out of IBIT ever. That said, another one can launch a 40 Act fund, buy IBIT, and lend some of it out and give you some of the yield. They can also write options on IBIT and use that income as yield. So there's plenty of yield Bitcoin ETFs on the market. They're just not they're not true spot ETFs. But again, as I said in my presentation, is that the ETF industry, I call it the ETF treatment. Once an ETF's popular, like IBIT, they're going to like put all kinds of decorations on it. One company is going to be like, here's IBIT, but with like options to protect you on the downside. Here's IBIT leveraged. Here's IBIT with yield. Here's IBIT plus ETH. They're going to give you every possible combination, and like that. I'm gonna date myself as a boomer. You know, Journey. Any way you like it.
Course, yeah.
Any way you want it.
Yeah.
That's what they're going to do. Any way you want Bitcoin, we're going to give it to you that way. So the ETF industry is the Silicon Valley of the investing world. They're all over it. Yeah. There's nothing. The exchanges really don't have a case. The case I would make if I was an exchange person would be the other tokens. The ETFs only have 2, but more are coming. But in the exchanges, you could go wild with all the meme stuff, which is why I think they push those. But that'd be the one advantage that they have, I think, over ETFs. But otherwise, it's tough to compete with ETFs. Ask a mutual fund issuer. Trust me, they're very disruptive.
That you have, just in this short conversation already, you've reframed this for me completely.
Yeah.
And I mean, just by saying that, like the basis point thing itself is.
I know, it's powerful.
You know what it makes me think? Honestly, it makes me think that the Bitcoin native people or the crypto are not taking this seriously enough.
I agree. That was the purpose of my that was the point of my presentation. I was like, do not underestimate the ETFs. Yeah. They're more punk rock than you think.
Yeah.
Think about it. The ETFs came out 1 year ago. They have more Bitcoin between them than Satoshi.
Yeah.
So they have 1.2 million Bitcoin in a year.
Yeah.
Why? Because they're so easy. You roll out of bed, fire up your Schwab account, boom, buy IBIT. It's free to trade pretty much, 1 basis point, 20%, 25% annual fee. And BlackRock, who I trust, is going to hold it for me. And it's got a government like regulatory stamp of approval. Sign me up.
Yeah.
And so they are benefit rich. And I wrote a book called The Bogle Effect about Jack Bogle, who started Vanguard. I won't go into the details, but he really kicked the butt of the financial industry by getting low cost stuff out there. And I was like telling people, you should pay attention to this guy and I compared him to Sam Bankman-Fried at the time, because even though crypto has had this message of populism and for the people, this guy was so rich, apparently. He was sponsoring Major League Baseball umpires, like the thing that protects them from the balls. And I saw it on TV and I'm like, this guy has way too much money. And it was a red flag to me. And I was like, Jack Bogle would never do that. He's like, that money has to go to the investors. So I think you got to be, if you're in this world, there's crypto as a concept that's populist, but then is your business also populist? Or are you just like raking the money out to become a billionaire? That's not very crypto-ish. And I think that's where there's a disconnect. And I think they could learn from the ETF world, because the ETF industry is lean and mean, not a lot of fat. And that's where I think they could learn. And that's why I had Matt Hogan or asked, I didn't have him. I asked him, and he said yes. He wrote the foreword of my book. He's at Bitwise, great guy, and he was an ETF guy turned crypto. And because I wanted him to square the difference between Bogle and crypto a little, and he did perfectly in the intro. So yeah, I would learn about ETFs. I would learn about Bogle.
Take him seriously.
Yeah, this is. They shared a similar spiritual disruptive thing. They really did. Just different industries, different styles, but they're connected slightly in a spiritual manner.
Very, very cool. Yeah. No, I'm gonna have to follow up on this. And you've already made me think about this, but I love this like lean and mean idea.
Yeah.
And I hear about this in crypto all the time, right? Compressing margins, making the take rate for different layers lower and lower. But it seems like, I mean, I already knew this about ETFs. I just hadn't really dialed it in. But yeah, I mean, that's why they've eaten so much of the industry.
Yeah, I mean,
the traditional
the
industry,
first ETF conference I went to about 15 years ago, the entertainment was a U2 cover band, and it was an ice cream social. I'm saying there's no money.
Yeah.
Whereas the hedge fund, which is called the SALT conference, they had like Kobe Bryant speaking and like, Bill Clinton. You know what I mean?
Yeah. I do.
Just like, and then champagne and stuff. Yeah.
Okay, speaking of that, just to turn a little bit, because that's a perfect segue, and it is one of my questions. First of all, I really enjoyed your conference coverage on X of this conference, right? We're both at the same conference. We're at Token249 Dubai, and I love seeing your thoughts on this conference.
Yeah, sure.
And I've never been to a traditional financial conference, and I just wanted you to tell me, what do you think about this?
Yeah.
And then how is it different than what you're used to?
Is this camera getting this in the shot?
Yeah.
So take this, turn the lights up a lot.
Okay.
Kill the music. Lower the booths down to this level. Kill all the cool graphics. Make the average age of the person about double. And that's about it.
Yeah?
Yeah.
But it's similar. It's a similar,
How do you like that?
Similar atmosphere or vibe, or is it like?
No. This is younger, more international, trendier, more buzz,
more wasteful.
Music everywhere, a little, but this is a young industry in a bull market, and it's grown so fast. When you guys maybe stop growing at this rate, things will tighten up a little bit, and the ETFs will probably do that. But right now, I think you got a lot of VC money coming in, and people are trying to market and stand out because it's like a gold rush. Yeah. So I get it, but this almost, if you turn the lights down a little more, and you turn the music up a little more, and you could have a nightclub here. Honestly,
no, yeah,
you're pretty much so. That's you don't get that at the financial conference, but you also, there's some similarities in that you have panel discussions. Some are boring. Some people speak with PowerPoint, so there's some overlap, but for the most part, this is just a different vibe.
Yeah,
and I enjoy the other ones too, but this is impressive. I'll be honest, it's impressive. Like the energy, it's palpable.
Yeah.
Yeah,
you were telling me as we were walking through that it really felt like a bull market here.
Yeah.
Right? Even though if you look in the media or some of the mass media and stuff, it might appear like the sky is falling. That's not the case you felt when you were walking through the floor.
Yeah, because the stock market had a rough quarter. And in the ETF conference, in 2023, right after the 2022 bear market, where the market was down 17%, I'll never forget it. There was a different vibe that year because the market had just gone down a year, and it was more somber. Conversations were more about like protection. This, honestly, you wouldn't know that there was just like a little bit of a sell-off. Now that said, Bitcoin did really well. I mean, it's 94,000. That's pretty solid, all things considered. So maybe there's some celebration around that, but I think in general, the more you learn about this space, not just the potential of Bitcoin as an indestructible money to combat the global money printer, but the crypto space in general, the blockchain technology, and just the potential for it in different areas. Once you start to extrapolate that, it's exciting. And you can see why people want to invest and throw money at it, even if it has like a bad quarter.
Yeah.
You know what I mean?
Yeah.
The ETF market, ETFs are just tracking stocks and bonds. This could have a bear market, but I think a lot of people look 10 years down the road and they're like, yeah, but the technology's there and the case for Bitcoin isn't going away. So who cares? Let's just keep putting money into it and launching and innovating. And that's where you find the buzz, I think, is from all the people. There's a lot of hopes and dreams out here.
Yeah.
I mean, how many of these people are going to be in business in 3 years, though?
Probably not many.
Probably a couple will make it, right?
Yeah.
But hey, that's capitalism.
Yeah, I mean, yeah.
Why not?
Yeah, exactly, right?
Fine. The best ones will rise. How about that green guy down there? What's he doing?
That's a Pepe, I think. That would be my guess. I'm not sure.
Oh man, so good.
All right, okay. A couple more questions. So, wild stuff.
It is. Yeah, you know, like you wouldn't see that in an ETF conference after a bear market.
Yeah.
I will say, the ETF industry has these theme ETFs. I remember one year they came out with the restaurant ETF, and they had these women walking around with like little hamburgers, and the ticker was Dine, and they were just like giving out hamburgers. And then other times they had like
that sounds like a crypto thing.
It does.
You just said.
But that in bull markets, especially the theme issuers get a little crypto-y, but they're only 5% of the market share.
Right.
You're like 100%. Yeah, that's why it's different.
Yeah. I hear you. Well, honestly, that's a little refreshing for me because I've never been to a traditional financial conference or, any other conference for that matter. And sometimes I wonder, like, is this too crazy? Are we a serious industry? But yeah.
The more I interact with the crypto world, the more I loosen up a little, because I think with the memes and the when there's a downturn and like people put a McDonald's hat on their head and they own like, hey, I'm going to go work at McDonald's.
Yeah.
That's a really nice spirit to have. The people who are bearish Bitcoin and like to like spike the football when it goes down, they never do the opposite when Bitcoin rallies.
Yeah.
And there's something good. There's a good sportsmanship, what's that called? Like,
self-awareness?
Self-deprecation.
Okay, deprecation. Yeah.
You need to keep that. Just don't get too cocky. But the self-deprecation is there, and it's very creative. A lot of creative types here. That's why it's so colorful. And a lot of people trying different things. And you're having to appeal to young people, so you have to get pretty creative. And that all is reflected here. So I've been trying to take notes and actually try to apply a little of this to the ETF world, which is
interesting.
And then you go from the ETF world to the mutual fund world. If you want to get really stuffy, go to the mutual fund conference. That's really mellow. But those mutual funds have
very serious and lots of money.
30 trillion in assets. They have like 25 times the assets you do. So I wonder if crypto will get, like when you guys are all 20 years from now, you think
I think
Bitcoiners like this.
I think Bitcoiners will get there sooner than
the
like
maxis,
maybe Solana or something.
Yeah.
I mean, honestly, like I've been to some like side events that are like Bitcoin only, and it's often a lot more serious, right? And a lot more technical and a lot more, like that. All right, I have two more questions for you, sir. Go ahead. You were going to say something?
No, I agree. There was one I went to that's Bitcoin only, and it was still a little more jazzy than the ETF, but it was not this.
No.
No.
Did you go to Token249 Singapore last year?
No.
Okay, sorry, as an aside, because you mentioned a club. I had never seen anything like this. At 5:30, they did turn the lights down really low, and they set up these like champagne pyramids, right? And they jacked the music up to where you couldn't talk.
They literally did what I said as a joke.
They literally did what you said, and it was a club. It was a full-on club. Everyone.
Awesome.
I mean, anyway, so just as a tangent.
No, dude, there was a smoke machine going on when I was about to go on stage yesterday on the main stage. And it was faint, but I was like, is somebody pumping out a smoke machine? And then like the song that came on was kind of clubby. And I'm like, I got flashbacks to my New York City club days in the mid-90s.
Yeah. Absolutely.
But it's fine. It's fine.
Yeah. All right, two more questions, sir. First, a little indulgence. You mentioned earlier that, how long it took the spot Bitcoin ETFs to get approved, right? 2013 was it when it came on your radar. And then I think you and several other people that I followed kind of predicted that it was going to happen, right? Within a certain period of time, we're like, the chances of it happening are quite high. You guys were right. But everybody pretty much was wrong about the Ethereum ETF, right? Like that seemed to come out of nowhere. And okay, go ahead.
Yeah, no, go ahead.
My conspiratorial theory is that it was just a political thing, right? It was going to be declined, but it was like a Biden Hail Mary to get it.
We'll never know. I lean towards your theory.
Okay.
Because we have good sources. We have our finger on the pulse, and our odds were pretty low. And then all of a sudden, even the people on the inside were shocked. And if they're shocked and they deal with the SEC, it was a shocking move. Now, why did he decide last minute? My colleague Nate Geraci thinks that it was all a grand plan not to have a circus show around it. But I don't buy that. I think that at the time, Trump said he's with crypto. And after he said that, the approval was like 10 days afterwards. Because after he said that, over those times, like Mark Cuban came out and said, Democrats, you're missing a big issue. It became an issue in about 4 days. And right after is when they approved it. I don't know about you, but that's pretty like 2 + 2 in my opinion. But we'll never know. I'm speculating. But in the end, though, because I still don't think Gensler thought Ether was a commodity. And I always think he still won't say, but I think he really thinks Bitcoin's a commodity. But I don't think he was willing to go there with Ethereum. And that was an issue. You can't you can't have a security be in 33 Act trust. That's why the security is a deal breaker and a commodity is okay. Anyway, long story short, I think that's probably why it happened.
You can tell me this, but like the executive doesn't have the direct authority to tell the SEC what to do, right? Or
I don't know. I mean, I'm of the opinion that if the boss wants something,
he's the boss.
Yeah, but there's also like senators that have a lot of power.
Yeah.
And there's also handlers. And so, could one of them have called and said, look, if you deny this, it's going to be a media story for like 3 or 4 days. We can't afford this right now. I don't know. This theory, when you go, it makes perfect sense. The other theory, you have to kind of think weird stuff happens. This theory makes perfect sense, but you can't ever prove it.
Yeah.
Hopefully somebody will interview Gensler one day, after the statute of like whatever is over, and he'll be honest and we'll all know. I don't know.
Yeah. I would love to know because I'm in the news. I cover the crypto news, and
I will say we were on it when it happened. Though we were the people who were like, we raised our odds from 25 to 75, and but it was a 180, just like that.
Yeah, and I mean, shout out to you and Jeff.
James,
sorry, my bad.
Okay.
Yeah, you are as you said earlier, you are my ETF guys in crypto, right?
Yeah.
And you're absolutely the people I look to for kind of clarity and clarification.
Yeah, because there's people saying all kinds of weird stuff out there. And then some people just say random stuff. And then I'll be like, and sometimes when I'm on top of something and someone tweets about it, I'll reply, who's your source? And then someone will reply with the meme, I made it up.
Yeah.
And I'm like, oh, okay.
Yeah.
And so people just make stuff up, and it's wild to me.
Yeah.
So you should look to us.
Okay,
and I get it, because
absolutely.
There's a lot of red herrings out there.
Yeah. All right, last question. So at least from the crypto side, especially like OG Bitcoiners, people who have been in the space for a long time, they look at the spot, they look at the inflows of the Bitcoin spot ETFs, they look at these kind of like corporate treasury Bitcoin strategy things that Saylor has done, and then Metaplanet has followed, and now like Tether and SoftBank have made a new company to do this. And they kind of are afraid that traditional financial institutions, governments, are going to start buying too much Bitcoin, and the rise of the so-called Suitcoiners, because they call them Suitcoiners, right?
But wait. It's not a new coin. It's just suits who own Bitcoin?
Yes. Yeah.
So in other words, the percent of Bitcoin owned by suits.
Yes, exactly. Will rise.
It's called suit coins?
Suitcoiners. People,
And so people are worried there's too many Suitcoiners.
they're going to be, yes.
Do I have your permission to tweet that out? I won't reference you. I'll
Absolutely.
just say,
Yes.
yeah,
The rise,
today I learned.
Yes.
Okay, all right.
People are worried about the rise of Suitcoiner,
Okay.
right? Like this group that could potentially, like the way Bitcoin governance works is so messy.
Yeah.
And the way it works actually in practice.
But
is
don't
you
over
vote with
90% have to agree to something?
Well, no. I mean, it's there's some fascinating podcasts on this, and I can send you some from like Empire. It's done a really good one. But
what would be their motive to mess with the system, though?
it's not that they would mess with the system. It's that they absolutely have a voice. And the way the like governance works, like if you look at the block wars that happened in 2017, basically people voted with their coins, and that determined the kind of the path of Bitcoin, right? And it's a real thing, right? Like there is a joke to it, but it also is a real thing where if you're going to do a soft fork, like I don't know how much you know about Bitcoin, but like the opcode stuff that's coming now, that's going to come to a head in the next 2 to 3 years, without a doubt.
So they're worried the Suitcoiners will have too much voice, basically.
Yeah.
Okay.
Yeah. And I was wondering if you...
No, I get it. You built this thing that's decentralized. It's a complicated tension between wanting to be grassroots and outside the system and decentralized versus number go up.
Yeah.
And those can be two polarizing forces inside of a person. You know, look, I would just say this. The exchanges ended up holding a lot of Bitcoin.
That's right.
There's really no difference. Like, in the end, like, there's going to be people who outsource the role of Bitcoin. The Suitcoiners are no different than the exchanges, in my opinion, in that regard. They're just making life easier for somebody who doesn't want their own wallet. So I also think there's a lot of Bitcoin people now in the Suitcoin world. Like Robbie Mitchnick is from the Bitcoin world, and he's got Larry Fink's ear. And I don't think these people they're kind of from this world. So the more crypto people that get into the DeFi, the Bitcoin ETF world, and even into governments, should maybe help that a little bit. But you're right. It's, you know, at the end of the day, if the head honcho person feels a certain way, I guess they could do it. The same worry exists in the stock market.
I was going to ask you about that.
Because Vanguard and BlackRock own like 16% of every stock.
That's what I was going to ask you. I was going to ask you. So, but the ETF has...
So here's what they do.
Yeah, okay.
They vote for what they think is just best for the stock. And they have a little corporate board. And however they vote pisses someone off. So you can't please everybody. But they tend to vote in a way that's like good for the company. Logical. And they also give you a choice to vote your shares if you want.
Oh, really?
Yeah. And so they might apply that system to Bitcoin and say, look, here's this issue. If you want to vote your specific little share, we'll take all of it into account and vote accordingly. I could see them doing that.
Yeah, absolutely. Very cool. Well, thank you so much, sir. I really appreciate it.
You got it.
Thanks for all the work you do online.
Yeah.
And for everybody watching, definitely follow this man.
You should.
All right, we're done.
All right.
I
Thanks,
appreciate
man.
it.
Yeah,
that
good
was
job.
great. I really appreciate it.